everyone. It's Mike Valtos from Order Flows, and today I want to talk about new ways to profit from order flow analysis. Now, order flow has been around for a long time. It's not some new phase, new fad coming into the market. And actually, I've been in discussions with people this week about how hedge funds are really starting to get into order flow analysis and using parts of order flow as data points in their analysis. So again, if you haven't at least taken a look at order flow, it's time you probably do, because you know what, otherwise you'll be left behind when the new wave of traders start coming in and analyzing and trading the markets. They'll be having more data to analyze than what you're looking at. So my goal for you today is explain how order flow analysis can improve your current method of trading. As a trader, you always want to be improving. It's not like you get to a level and that's it, you just stop. No, you have to constantly be improving your game, whether it's in trading or sports. Great athletes are always trying to improve their game, and so are great traders. They're always trying to improve their returns. Get alpha is the whole point of trading. And I'm going to show you how to combine order flow with other forms of technical analysis. Again, I don't expect you to just take everything you've ever learned and throw it out the window. Rather, you can combine order flow with ways that you are already trading and find better entries, find better exits. And I'm going to give you a simple order flow setup that you can apply to your trading tomorrow. And it's a setup that works with order flow, and it's with a technical analysis tool, and hopefully over time, as you become more comfortable with order flow, you can rely less on technical indicators. And if you stick around until the end, I'm going to show you how to download a copy of my book, Trading Order Flow. It's a 150-page book I wrote on trading order flow. It's basically my last 20 years of experience in trading and how I've used order flow and how other people use order flow in their trading. So for those of you that are new here today, they're not familiar with me, just really quick who I am. For the last 3 years, I've run orderflows.com. I'm the owner and trader there. Prior to that, I spent 8 years at JP Morgan as vice president of futures trading. That's what I did every day, is I traded futures. Before that, I was with Commerzbank as the Eurex trader. I traded Bunds, Bobelschatz, Euro stocks, and DAX. And before that, I spent 4 years at Cargill as trading desk manager on the futures side. 2 years at EDF Man as global macro trading desk. And I started on the CME floor with Dean Witter. And eventually I left the floor to trade upstairs on the Globex, what was called the Globex desk, when Globex, the electronic trading system for the CME, was just starting out. You had Globex, Project A from the Board of Trade, and you had NYMEX Access, as well as all the European exchanges that were trading live overnight at the time. So, I have a very solid background, and the reason I put that out there, just so you understand, my background, where it's real world trading experience in different markets and different environments. Now, in 2013, I left JP Morgan because I wanted to spend more time with my family. And I was 44 at the time. I wasn't old or anything by that standard, unless you ask my wife. But that's what trading can do for you. It gives you that freedom to do what you want. To take those changes in your life. Because if you're working at a job, a lot of people work jobs that they hate going to, and they can't just quit the job because they have commitments. But if you know how to trade, it gives you freedom to do what you want and trade wherever you want in the world. I know people that literally have a domicile. They live in one place, but they travel around the world, spend 3 months in one country, another 3 months in another country, and trading. And that's what trading can do for you if you're successful at it. Then I started writing my book, Trading Order Flow, which you can get at the end of this presentation. And I was still trading. I was trading with order flow, but the problem that I had with the software out there was that it was just a basic charting software. It just gave you the footprint chart and nothing else. And computers are there to help you, right? And then I know that if I wrote down a set of rules, I could have a programmer take it and put it into the software to help me see the areas of price rejection, price support, absorption, and other market nuances. And that way it would take off some of the the burden from my shoulder of having to really analyze, and I could look at other things in the market. And it runs on NinjaTrader 7, NinjaTrader 8, whichever you use. But what I'm presenting here is what I've developed for myself and built my trading career on. This is what I use to trade professionally, in institutions. And I hope you can find things that you can use and you can modify and adapt for your own trading. I'm not saying, you have to become a robot and mimic me like that. No, what you have to do is you have to evaluate everything you come across, whether it's from me or whether you read a book or watch another presentation, some of the guys earlier or after me, and decide if it's going to help you. If it's going to help you in your trading. If not, you reject it and you move on. Traders go through journeys, and along your journey, you try things that work for you. You find what works for you. If it doesn't you, and you always want to be improving your game. In trading, you have to make trading decisions. That's what trading is about. And order flow is not a red light, green light trading system by itself, but when you understand what's happening in the order flow, you're going to understand the market, and your decisions are going to become very, very clear. Now, before I jump into it, I got to go through the brief disclaimer. This presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance, again, is not necessarily indicative of future results. And results vary. Not everybody has the same time commitment or the same mental commitment to learning how to trade. So again, it's if you were to look, if you had a room full of traders, everyone's results is going to be different. You could teach them the exact same thing, but it's up to the individual to take the initiative and learn it. Now, successful traders, they make the best use of available information and process that information in an elegant way. And for me, that's always been the volume footprint chart. And it means having a firm grasp on the elements of the market analysis, as well as a sense of which factors are important in which situations. One of the reasons why I really believe that a lot of beginning traders or retail traders fail is because they don't know how to read the market. They don't understand what they're looking at on a chart. They treat every instance of a buy signal or a sell signal the same. No, you got to be taking things in context. So the first thing I want to talk about is how order flow analysis can improve your current method of trading. And again, every trader everywhere in the world, whether you're in Chicago, whether you're in Beijing, whether you're in Brazil, has access to the same information. It's how you use that information that makes the difference. And as a trader, you have to learn how to recognize those advantageous situations. And for me, that's where order flow comes in, because it helps me understand what's happening in the market, and it helps me limit my risk per trade. The information is not available on a normal bar or candlestick chart. And when I say limit your risk per trade, if you want to have a good month trading, you have to be around at the end of the month still trading. If you're going to risk so much per trade that after a few days you're going to be blown out, then that's not a good method of trading. You need to find a better way to trade. So really basic stuff, just so people understand how the futures markets work. Futures trade in a two-way auction. There's a bid and there's an offer. And if you have a trading platform, you'll see you have a book, depth of market. We've all seen this, and on one side is the depth of market for the bid. On the offer side, on the other side is the offer. So you can see the market is 61.25 bid at 61.5 offer, and you can see there's 95 on the bid, 73 on the offer. Above that, there's 89 sellers at 1 3/4, 88 at 2 even. On the bid side below, there's 77 bidding there at 61, and 8 people bidding there at 60 3/4. So that's basic stuff. But what a lot of people don't realize is there's two types of buyers and sellers. There's 4 types of traders. You have a passive buyer, a passive seller. And a passive buyer is someone who tries to buy on the bid, and a passive seller is someone who tries to sell on the offer. So when you look at the depth of market, the people that are sitting on the bid, these are passive buyers. They're waiting for the market to come to them, right? And people that are on the offer and above the offer are passive sellers. They're waiting for the buyers to come to them. Now, next, you have aggressive buyers and aggressive sellers. Aggressive buyers are the ones that buy at the market, they buy the offer. Aggressive sellers are the ones that sell at the bid or sell at the market. Basically, they're aggressive, they want to get into a trade. If there's no aggressive trader, the market's not going to move. It's just going to be forever 61.25 bid at 61.5. Someone has to be aggressive. So if someone's trying to sell it at 61.5, they're not getting filled, they think, oh gosh, I really think the market's going to go down. They're going to be aggressive, and they're going to sell it at 61.25. They're going to go to the market. They're going to hit the bid. Again, a trade is not going to occur unless somebody is aggressive. Now, all this information is put out by the exchange, and you can see it on the time and sales. And if you've ever watched a time and sales ticker, it moves super fast. You know, I mean, there's trades happening, hundreds of trades in a second sometimes. You know, it's super fast. And again, trying to make heads or tails of that, you can't. You know, it's just going to make your head explode. It's gonna pop your head open. But what the volume footprint chart does is it puts it into an easy to read format. And you can see what was traded on the bid, the volume that's traded on the bid, and the volume that's traded on the offer. And over time, as bars form, whether you're using a minute chart, a range-based chart, you're going to get a chart. And you could still use, your regular candlestick charts. I use candlestick charts as well. This is an order flows trader volume footprint chart. I sell a software. It's called Order Flows Trader, and this is what the chart looks like. So I could still see, my normal candlestick patterns, but then I can see what's being traded. Where are traders being aggressive, or is there being price rejection? Is there being price support? Is there imbalances in the market? All that information is there for me to see and analyze and make a chart. You don't have any of that information. I laugh sometimes, when I see these guys talking about, oh, there's trap traders, and they're just looking at a normal chart like this. How can you determine that people are really trapped? You don't know whether one lot traded at this price or 1,000 lots traded at that price. So to stick your neck out and say, well, I think there's trap traders there is really a disservice to, people you're trying to explain it to, because you don't know. I mean, you can't say there's trap traders here if you don't know what the volume was. I'm sorry, but I think it's just a disservice to people to say, yeah, I think there's trap traders, when you don't really know if, whether one lot traded there or 1,000 lots traded there. Now, at first glance, the footprint chart, it does look a bit confusing, but there's really three things you need to focus on. Point of control, delta, and imbalance. And just really quick, point of control is the level in the bar with the most volume, and on most footprint charts, it's got the rectangle in that bar. You can see the gray. That's the point of control, and that's important for determining support and resistance, oftentimes in the next bar. I've got other presentations on that. You should check them out on my YouTube channel. Now, delta is the net aggressive buyers or sellers in the bar. So if it's positive 155, that means in that bar there was 155 net aggressive buyers. If it's negative, it tells you there was net aggressive selling. So like here, -6 is there was net aggressive sellers of 6. 43 minus 43 is net aggressive sellers of 43. Positive delta of 226 tells you there was positive net aggressive buying, 226, versus the net aggressive selling. And imbalances is when there are more aggressive buyers than sellers, or more aggressive sellers than aggressive buyers in the two-way auction by at least 4 to 1. And it'll, in the bar, in the volume in the bar, if it's a buying imbalance, you can see 2 against 48 right here in the middle. That's a buying imbalance. 2 lots traded on the bid against 48 on the offer. Now, a selling imbalance will be the opposite. If there's more aggressive selling versus aggressive buying, you can see in this bar here in the top, 31 against 145. That's more than a ratio of 4 to 1. There was 31 aggressive buyers versus 145 aggressive sellers. And there's ways that people use this as well to determine real-time support and resistance. And again, this is information that's available to everybody out there. That's whether you want to look at it or not. A lot of people don't look at it. So the whole thing to being successful in trading is to do what other traders do not do, right? I mean, overwhelmingly majority of traders lose money. Now, when you're trading, you got to still respect the crowd, but doesn't necessarily mean you have to follow what the crowd is doing. The crowd regularly makes mistakes in the markets. You have to learn to recognize when they're wrong so you can take advantage of that situation. And again, trading at its heart is an information game. To be successful, you have to use the same information everyone has access to, but you have to analyze that information better than them. And there's a lot of information out there, but the key is you got to process it in a way that's most effective for the way you trade. And again, there are now hedge funds that are coming into the market, allocating money to analyzing order flow and using it in their trading methods. So again, you can see here like a volume footprint chart. You can see the buying imbalances are blue, the selling imbalances are red. As the market's moving up, you generally see more buying imbalances. As markets move down, you generally see selling imbalances. You notice point of controls versus the previous bar is often a good support or resistance level. You can see on this move up, right? Where do you trade? Each point of control is migrating higher, right? On the way down, point of controls are migrating lower. Delta, on the way down, delta is generally negative. On the way up, delta is generally positive. So, once you understand that, you can start applying it to your trading. And most people, they already have a method of trading and they have some success with it. I meet people and they're like, Mike, I'm a sort of a break-even trader, but I want to add order flow. I want to take my trading and become more successful, consistently successful. And I say, okay, how are you trading? And there's many different ways that people are currently trading. There's chart patterns, candlestick patterns, Bollinger Bands, Williams percent R. And there's so many different ways people are trading. I can't get into all of them, but I've got a few of these here that I just want to talk to you about. So, simple technical analysis, right? Double bottom. Okay, so first time you hit this low, you rally up, then you're coming back down into this low. Well, as you're coming back down in here, now I know people, their whole method of trading, they don't use anything other than a simple bar chart. And they say, well, I had a low here, I'll just put a bid in here. And if it fills me and rallies, great. If not, I got to stop to get out. And that's their whole method of trading, and that's fine. But then, I say, well, what if you can cut out those times where it's either going to break and you're going to get stopped out, or if it comes down in here, you could manage it, and if it starts breaking, get out, or you know that the trade is going to the market's going to rally from here. I mean, rather than just sit here and say, well, I'm going to take a 50-50 chance that market's going to come down here and then pop back up. Why don't you just analyze it and when it comes there? And so for perfect example, this is that low here, the circle in the previous chart, and you can see as you're coming down, it's strong selling, okay, but then you hit your low, and what's happening in the order flow? You got positive delta. That's a good sign in this green bar here. You've got some signs of price rejection in the order flow. That's what this this blue number indicates. This is a proprietary indicator that sits on the order flows trader software, and you're starting to see some buying imbalances coming in here. So this is a very high percentage trade. You're going to have a high probability that we can continue up because you're seeing signs in what's happening in the order flow that there's buyers coming in. Anytime you test a low, as you're testing this low back here, you want to know, well, are we going to rally or are we going to keep selling off? And you're seeing the signs with the aggressive buying, signs of price rejection, positive deltas. You got net aggressive buyers. That's a high confidence trade that if you're going to be wrong, you could get out really quick. Your stop should just be very tight. It's not going to be a stop, predetermined stop of 3 points or anything like that. No, you know what? Based on the order flow that it's bullish. So you can have a very tight stop that if you sort of break this low here, you get out, period. You don't wait for it to go all the way to your stop to stop you out because the order flow is giving you a very bullish sign. So, take the example a bit further, right? So this is your double bottom here, and then later in the day you came in, and if you're just blindly trying to buy these bottoms, putting it in here with a bid, thinking we're going to come down in here, test it again and rally. It's not like support and resistance are infinite levels where it's always going to test that level and bounce off of it. No, it's going to break at some point, and it just breaks right through here. It's very sharp, very dramatic. Imagine you're buying it here, boom, and 2 bars later, it's a 1 minute chart. Within 30 seconds, you're stopped out. Those are the trades that we all hate to take. Whereas as soon as you get into the trade, you're wrong. But with order flow, you could get a sense of what's happening as you're selling off into this. This is that line here, right? The 68 level, and we're coming down into that level. We're testing it, and what do you see? You're starting to see the deltas get pretty strong. So that you have strong net aggressive sellers, 394, minus 394, minus 578, minus 500, then boom, minus 2,000. Would you want to be buying at a spot where you have net aggressive sellers of minus 2,000, especially when normally you have net aggressive sellers of just a couple hundred or net aggressive buying of a couple hundred. No, that's like standing in front of a freight train. You wouldn't want to do that. And if you had a bid in here, you're just, boom, it just blows right through there within, seconds, and you're just stopped out, and you're left holding the bag thinking, okay, I'll look for the next trade. But why? You could analyze it as you're coming down in here and realize, this selling is very strong. I probably don't want to be trying to buy it there, because those are the cases where you're sitting there, you're trying to buy something. I used to see this when I was working at JP Morgan. Sometimes we'd be trying to buy something, a big position, and we'd be working our bids, and the market would rally. Then the market would start coming off, and I'd have to cancel my bids, because I know that if the market starts coming off, I don't want to be buying it at those levels. I know I could buy it at a lower price level. And you can just see how this market just powers right through there and just keeps going lower, right? You don't want to be buying it here and then just getting stopped out 2 points lower, when you could sense that the selling is quite strong coming into that it's probably going to keep going down. You save yourself a losing trade. And what's that going to do for you mentally is it's like having a winning trade. It's like you feel like you won because you didn't lose, as sick as it sounds, but that's the case for a lot of people. Trading is very, very mental in the sense of you got to be on, once you start suffering losses, it really throws you off keel. So here you have a potential double top. Okay, again, I know people that they say, well, on this way up they would have been selling, oh, I got an offer in here to test it and then sell off, and I got a new high here, I put an offer in here for it to sell off, another high here for it to sell off, and they're taking losses all that way up. Why not just let the order flow convince you of what's happening in the market? To me it's just it's common sense. So you have your high here, right? This is that second high, this one here. And what do you got? You've got in the order flow, you've got a sign. This red arrow is, again, it's something that's part of the order flows trader. It tells you when traders are trapped in the market. So I know at this high area, traders are stuck in the market, right? They're long and wrong. And then I know in the order flow, there's some resistance up in this area as well with this blue number. And then I see selling imbalances come in. Okay, we sell off a big down bar, then we just start going sideways, sort of working our way back up. Well, are we going to go back up, or are we going to start to sell off? You're looking for clues in the order flow. And then you start seeing it in here, negative delta, negative delta. Then here you got multiple imbalances. Now, granted, we're still in that same area that we were in this one bar, so it's not like we're selling off, how many ticks already, and then you're making the decision. We're still just sort of going sideways, but you're seeing that information in the order flow that, okay, yeah, you know what, I think it's going to give me a chance to get short here. I could have my stop, just around this high level up here. So again, it's not like the high level and then a further how many ticks above it. It's, if we start getting up past this area up in here, you're out, simple like that. But you can see how the signs in the delta, the negative deltas, are starting to pick up. You've got multiple imbalances in this bar. That's why it's got the pink box around it. And then the market sells off. This is the continuation there. We sold off from like the 80 area down into the 60s. Now trend lines, do you draw trend lines? I used to be a big trend line guy when I was trading Hang Seng a lot, because the market was, it respected trend lines pretty good. And there's times when you have rising markets or falling markets where the markets can just hug the trend line, and those are very frustrating times to be trading. But you know what? If you break the trend line, watch what's happening in the order flow. Are there signs that it's going to break through, or signs that it's just going to go sideways and sort of do nothing? And watch the order flow when the trend line breaks. Watch the delta. Look for imbalances. Keep an eye on the point of controls. We broke the trend line here. What do you got? You got negative deltas all in here. You got a couple bars with positive, nothing major, 9, 26, 32. But we broke the trend line. 107 was quite strong, and we do rally back up to it, and then boom, we got more selling coming in. You can see it in the deltas, negative, negative. And you could be fairly confident that we're probably not going to just hug this trend line and go higher or break back through it, that this break of the trend line is probably strong. And if you trade trend lines, where you're going to be placing your stop, just right up here. It's worth, it's a several tick trade in the terms of your risk to reward as far as getting stopped out. You could take that chance of getting short if you're going to test that trend line right up in here and get the move lower. All right, I mean, this is how, we broke it, came back up there, then had that nice sell-off. Now again, you got another trend line here. It's the same chart, just a different side of it, and you're coming back up through the trend line. Okay, well, what's going to happen in the order flow? Let's take a look. You break the trend line, you get through it, you got positive delta in here, point of controls clearly above there, positive deltas mostly, 52, 22, 30, 57, 55. More importantly, you got buying imbalances. You got aggressive buyers coming in here. Here you got a multiple imbalance bar, stacked buying imbalance actually. And you're seeing signs in the order flow here with these blue numbers that there are support in the market, supportive buying, meaning passive buyers appearing in the market. And what passive buyers are, those are the people that come into the market to bid the market up, right? They sit there, they bid it, 60 bid on 50, okay. Some people trade there, market starts ticking higher, then 61 bid on 50, like that. That's what supportive buying is into the market. And you can see how the market just goes up, but the signs are there in the order flow that, hey, we broke this trend line. It's a legitimate break of the trend line, get on board. And these are just basic, order flow and technical analysis. Now, Williams percent R, right? Not a lot of people use it probably in the U.S. I don't know, but it's big in China. They publish it actually in the newspapers over there for their stock markets. But what it does, it's an overbought, oversold indicator. But the problem with overbought, oversold indicators is a lot of traders, first time they use them or experience them, they fail to realize that the market can go from overbought to more overbought to extreme overbought. And if you try to sell it the first time it gets into the overbought area, it could be a long time before it gets out of that overbought area. Meanwhile, the market keeps rallying and you're stopped out. But what order flow analysis can do is it can help you determine when that buying is stalling out, or if it's, selling oversold, the opposite. So here, Williams percent R. Now, if you're not familiar with it, just really basic, it's minus 20 and minus 80 are your thresholds. So anything below minus 80 is oversold. Anything above minus 20 is overbought. So, we're coming down in here. You can see the market selling off. And, we're below the minus 80 level on the Williams percent R. And then we start seeing signs as you come into the swing low of price rejection here. And then the market starts ticking higher. More importantly, the delta, on your low, we got a negative delta, okay, but then the delta starts increasing, positive 227, positive 439, positive 928. So aggressive buyers are coming in here. And unlike on the move down where you saw just aggressive selling, you're starting to see aggressive buyers coming in the forms of market imbalances. And in this case, you've got buying imbalance, buying imbalance, buying imbalance, buying imbalances all appearing. So that's a sign to you that, hey, you know what? I could take this high percentage trade, if we break this low, I'm out, rather than, trying to decipher the Williams percent R by itself. You use order flow in combination with a tool that you're already using, and you see how the market put in a nice rally from the 59 area all the way up to the 64. And here's an area, here's a chart where we've been in the overbought area for quite a while, basically the whole chart up until this end here. And as you start coming out of the overbought area, what are you seeing in the order flow? Well, mostly you're seeing on the way, as you're already in the overbought area, positive delta. So you know that you have net aggressive buyers. You can see the buying imbalances mostly, in all the bars. And then you get to the swing high here, you got negative delta. You're at a swing high, you got negative delta. That's not a good sign. It's probably a sign that, things are shifting, aggressive, we've reached a high area, now you have attractive sellers coming into the market, and the market can sell off. And even at this high, you've got multiple imbalance, selling imbalances, negative delta small in the next bar, but then in the next bar, you got a bearish order flows ratio telling you there's resistance up here, telling you that there's supply in the market already, and strong negative delta as you're starting to come out. So again, that's going to give you a low risk entry, because you know what, if we start getting back above these high areas, that's where you want to get out. You don't want to be say, well, I could put my stop in 2 points above this high. No, if you just get back up to this area up in here, that's where you should be getting out. And then you can see the market again, sells off from the, what is that, 72 area, 72 and a half, down into the 67, 68 area relatively quick. This is a 1 minute chart. The less time you're in the market, the better you are, because you're not exposing yourself to so much risk. Again, similar case, you rally up, Williams percent R goes from we get into this overbought area, and then you just go sideways. Market goes sideways as well. You start coming out. What do you get? You got a stacked selling imbalance as you're coming out of the overbought area. But earlier, this was the key here, this one bar with the arrow, strong negative delta, minus 777, minus 777, right up off the high. You got aggressive selling in terms of 1, 2, 3 selling imbalances in that bar. This bar is like, hey, wake up and take a look at this chart, get ready to get short. And, when you see this bar in here with the stacked selling imbalance and the strong negative delta, you should be already thinking of getting short here around 78, 79, again, for the very quick move down to 73. And, this is how people are using order flow with their existing method of trading. I can't get into all the different ways people are using it, but those are ways that people are using it today with their existing method of trading. And it's not about throwing out everything that you've ever learned about trading out the window. No, it's using order flow with your existing method of trading that can help you. So I'm going to share with you a strategy that people have been using for years that I know. Order flow divergence with Bollinger Bands. Now, what you want to do is you look for divergences in the order flow when you trade outside the band, either at the upper or lower end. Now, if you're not familiar with an order flow divergence, it's basically a new high, new or equal high, or new or equal low with opposite delta. So here you got a new low with positive delta, right? If you have a new low, generally you should have a negative delta. But when you see the buying coming in, that's giving you a divergence because you're making a new low, but you have a positive delta. That's your divergence. Now with order flows trader, we take it a step further. We say, I want price action of the bar to confirm this, and the bar has to be green. Or if it's a selling divergence, the bar also has to be red with negative delta at a new or equal high. So you can see we broke through the lower band, right? And if you're familiar with Bollinger Bands, when you break the lower band and you're supposed to rally to the upper band, right? That's how you trade it. But if you're just buying every break here, you're going to, on a trending market, it's always going to hug it on the way down. So what you want to do is you want to find a decent entry, and order flows divergence can give that to you. You can see here you're getting long. This one kind of went sideways before it popped up. I mean, the upper band did go lower, but eventually we went from the 6860 area up above 6900 in the crude. It's a 1 minute chart as well. This is a 5 minute euro currency, right? We hit the upper band, blew through the upper band, but you got an order flows divergence sell up here, right? You've got the negative delta, and you also have some things in the order flow here. You got a single print, and you can see over the next 6 or 7 bars, basically you trade down towards the lower end of the bar, of the lower band down here. You get back down to from the 123.34 area down into the 123.20 area over the next 15-20 minutes. And again, as you're moving in a direction, lots of times people want to sell a band, and whether you're using Bollinger Bands, you use VWAP. A lot of people like to use VWAP nowadays as if it's some great hidden secret. It's actually not. But if you try to just naked sell every upper breakout of a band on a market that's trending, you're going to have a lot of losing trades. This bar here, no divergence as you broke through. You get up, you test it again, no divergence. If you sold these, you'd probably break even on this one if you're lucky. This next one as well, you would have taken a loss. But then, boom, you get your bar up here at the high up here. When you break through it the third time, you got your divergence and you got your sell-off. Those are the trades that you want to take. You let order flow help you refine your entries. It's not about filtering out your entries. It's about taking smarter entries, where the market is telling you what's happening in the market. That's using market-generated information that, again, is available to everybody, but not many people use it. Here, this is a terrific sell. You have a lot of things here. You've got your order flows divergence. You got a stacked selling imbalance. Aggressive sellers are definitely in control. Your point of control is above, outside the band, and again, you sell off from the 6930 area down to the 6900 area pretty quick. So hopefully by now you can see how powerful and strong order flow analysis is. A lot of traders like to complicate things. They like to make trading more complicated than it really is. And and that's what the problem is with a lot of traders, and that's why 90% of traders keep losing. And that's the worst thing that you want to do, is you don't want to keep losing your money by doing the same thing that losing traders do. And again, just going back to the simple chart that I showed you earlier, if you're just trading a normal candlestick chart, you're just not taking advantage of the opportunities there that's presented to you if you were to look at a volume footprint chart, right? And again, it's the reason I created the order flows trader software is, I didn't invent the volume footprint chart. I don't claim to. Rather, I like to think I took it to another level, because, order flows, I like to explain it like this. It's not for the order flows trader software. It's for those traders that are not technically savvy. We're not everyone, who's born in the matrix. You don't have a chip put in their heads. You're not an engineer or a computer science major. And sometimes, trying to make heads or tails of what's happening in the market is a little bit complicated. And, I wanted the software to show me, that's what these blue numbers up in here represent. They either represent price rejection or price resistance. And, there's other tools, they don't have it on this chart, that show me where there's areas of potential trap traders and, and other things, because, I wanted to give traders an opportunity to cut and decrease the stress and anxiety from sitting behind the keyboard trying to understand, okay, what's this bar mean? What's that bar mean? You don't have to analyze every bar. You can see up here, boom, we got a swing high, and the information in the order flow based on this number that's up here, this ratio, is telling me, you know what, there's price resistance up here. And if I know there's price resistance at a swing high, market's going to sell off, because what price resistance means is you have supply coming into that market. So that's information that you can use. Just as you come down in here to the swing low, you can see there's supportive buying in here in this number here, this 0.3. It's kind of hard to see, 0.3221, and the market rallies back up. This is information that's out there, and not a lot of people use it. All right. I mean, so forget about. Put those days behind you where you just want to have where you're trying to trade and you keep losing because you can't do anything right. We've all had those days where it's like you wake up and you go to open the door and the handle breaks. You go to your car and the car won't open. Forget those days of throwing your computer out the window because you can't make heads or tails of the market. That's what the order flows trader software is supposed to do. I mean, that's why I had it created, is to help you, the trader, understand what you see in the market and analyze it and make quick decisions. Now, a lot of people like to, what I call, flush their money down the toilet. Every other week they're buying a new indicator out there that's guaranteed to make the money. That doesn't exist, right? It's being a successful trader is about making your own trading decisions with the information that's out there. And if there's a way that you can take that information and put it into an easier to read format, then you can make your own decisions and become more successful in what you're doing. So, I have what I call this order flows trader software package, and it's my software. It runs on NinjaTrader 7, NinjaTrader 8, and it's the volume footprint chart. It's all the charts you saw in this presentation, okay, is generated from that software. And I've talked about some of the pre-programmed order flow indicators in there. We're actually going through an upgrade on it right now, and we are adding a couple extra little things in there that's going to make it even better. I haven't got the beta version out yet from the programmer, but hopefully by next week I'll get it. But again, any upgrades you'll get free of charge as well. But more importantly, you get my chart template. So your charts can look just like my charts. You don't have to spend hours trying to figure out how to set the colors or do anything like that, because that's a pain in the butt, honestly. And you shouldn't have to go through all that. I want to get you up to speed as quickly as possible. But having order flow traders software is one thing, right? You got to know how to use it. You got to know what to look for in the market. So that's why I provide a lot of further education. And if you buy the software today, you're going to get access to, I have a 15-hour course on order flow trading. It's a basic course, it teaches everything you want to know about order flow and probably a lot of stuff you didn't even realize. And I normally sell it for $297, but I'm giving it to you today for free. But a lot of people, once they start understanding order flow, they really build up their appetite to learn more. And I have what I call this inner circle. And what it is, it's really more in-depth. Right now there's 56 videos on there, and there's additional indicators on there like Delta Scalper, POC Trader, that are going to help you in your trading, and you're going to get that access to that. Normally I sell that for $1,000 more or less, and you're going to get access to that for free. Okay, so if you start adding that stuff up, I mean, it's already over $2,100, and that's a lot of money. But again, you got to ask yourself, what's it worth to you? Is it worth learning how to trade and potentially giving yourself the freedom and that you need in life and to do the things you want to do in life, because money comes, money goes. If you need more money, you go out there, you could earn it. But to get proper education on something is not something that's always easy. But today only, or for the weekend, I have a special gift because of Inspiration asking me to come in here and do this presentation. Is I haven't offered this before to anywhere. It's not really public actually, and it's a new course that I've created. It's called Traitor Kickstart, and it's about the mental game of trading, on how to deal with your discipline, how to develop discipline, how to deal with losses, how to create a trade plan. And normally I sell this course for $297. I'm going to give you access to that today for free. And you add all that together, this number's wrong, it's about $2,500 actually. It's over, when you add in the software, the training, and the Inner Circle and the Traitor Kickstart program, normally it's over $2,500. But for a one-time payment today, you can get access to all that for just $1,250. There's no future payments to me or anything with upgrades. It's all included in there. You get it all. And what other people are saying, about it. This is on Facebook. Mike, your order flows trader software is remarkably helpful. I can clearly see now what's happening in the market. For example, who's in control of the market on a very specific time and who's getting weaker as well. That's what people are writing about it. So you have to go act now, right? You got to go all in. And what do I mean by all in? Well, the guy on the left, he's not all in on getting married. This family on the right, they're all in. They're dedicated, and that's what I want from you is, I want your dedication to learning how to trade, to improve your trading, to become a better trader. So, you go to orderflows.com/all-in, and it's going to take you to a page. It looks like this. You just scroll down. You scroll down to the button. Just click join. I'm all in. That's what you want to do. It takes you to PayPal. I don't process your payment information or anything like that. It's all handled by a third party, so you don't have to worry about your safety. But why you want to join order flows is because you see the power of order flow analysis and how it can improve your trading. You understand what's happening in the market. You want to find low risk trading opportunities, and more importantly, you want a life of freedom and fulfillment. Time is money. You've all heard that saying, and you can't get back time, right? And if you're stuck in a job that you don't like, and you want out of it, try trading. If you're good at it, it's going to give you that freedom and fulfillment. I'm not going to say everyone is going to succeed at trading. That's not the case. But for those that are willing to put in the time and effort, you can do that. I did it. Before I was working in a grocery store, and I said, this is not what I want to do. That's when I was 21 years old. I said, no, this is not what I want to do. And I said, I want to get into trade. I've always been interested in trading. So I said, I quit my job and I got a job on the CME floor making minimum wage. But that's how I did it. Nowadays, you can't do it. There's no trading floor, and unless you have a degree in computer science or advanced math from a top level university, you can't do it. So that's why I create Order Flows Trader, and the education is to pass on my education to you. So if you want a copy of my book, go to orderflows.com/book.html, and it's going to take you to a link. You enter your email and your name and email, and it'll show you how to download. After you enter it, you'll get an email back saying please subscribe. Then you'll get access to download the book. Now again, it's all about going all in, being dedicated. The house on the left, they're not all in on their Christmas decorations. They're half-ass in it. That family on the right, they're all in. They're dedicated to it. And that's what I ask of you is become dedicated and take the opportunity to learn and improve.